Stephen Roach with us. Can't think of a better day to have him here. He's pre-Davos. He's not going to Davos. You weren't at the steak dinner last night, were you?
No, I didn't make it, Tom. I had to teach at Yale last night.
Who would you have insulted more, President Obama or President who? You're good at that. Who would you have agitated?
I would have gone after Ken Pruitt.
You would have gone after Bloomberg Surveillance Radio. He deserves to be gone after. The China of 2016, what are we missing in the dialogue of the last few days?
I think what we're missing is the big change coming in China. People look at China and they want to extrapolate. They want to extrapolate the China of the last 5 years into the China of the next 5 years.
Yes, thank you.
And this is not a time for extrapolation. China is at a pivotal moment in its development journey. The model that has driven China for 30 years, brilliant and successful as it has been, is all about exports and investment. This next 5 years is about internal private consumption. Different model, different impact on Chinese people and on its trading partners, especially the United States.
I've been dying to ask you this question. Is President Hu, is he a lame duck president? Is within the strange politics of China?
There are no lame ducks in China. This leadership is engineering what I think will be a smooth, relatively seamless, and very successful transition. But during this last year, I think he will continue to exert a lot of command and control over this nation.
And we're going to do this, folks, for the next half hour. We're thrilled to have Dr. Roach with us for a lengthy amount of time. We're not going to rush through this. How do they pick a president? Do they have, like, smoke and everybody stands around and the white smoke comes out of the chimney? Or do they actually vote? Do we know?
No, there's a very elaborate grooming process. A typical leader has been a mayor, a provincial governor, from time to time headed up a governmental ministry. They give them a wide portfolio of experiences, and the pyramid just gets narrower and narrower. And as the leadership moment arrives, they come up with a short list, sort of like what we do when we're searching for new executives to run a corporation.
Some Morgan Stanley does it too.
We don't operate like the Politburo, no.
No, very good. Let's look at this chart here. Let's bring it to the current, which is Chinese inflation. Steve, you can see it down here, dreaded first chart. China inflation, there's been 3 peaks here in the recent years. Why is this peak different than those 2 previous ones?
Well, I think right now the inflation situation in China is borders on being a serious problem, Tom. We've got 5.1% CPI inflation through November, and if you strip out the food and energy, it's a number close to 4s. Both measures, the headline inflation and the so-called core inflation rate, have accelerated about 1 to 1.5 percentage points from their year earlier pace. This one is different because China can't afford an inflation problem when it's also changing the growth model.
Right.
If they're going to
mix of growth.
If they're going to put in place pro-consumption policies, they've got to have a pretty clean outlook with respect to inflation. Because if they end up having a hard landing because of a monetary tightening, they will not be able to transition the growth model.
I mean, I look, Steve, at the idea of the challenges the Chinese have in this growth mix. And as Michael McKee said to me first thing this morning, if you use the U.S. measurement of GDP, it wasn't a 9% statistic. It was 10 or 11% if you do some form of chain-weighted analysis of GDP. China's booming, and the price of that is this inflation, isn't it?
Well, they're growing very rapidly for a lot of reasons. To me, the most important reason is that they have a manufacturing-led model that drives exports and investment. How do you boost manufacturing productivity? You substitute machines for people. It's a labor-saving growth model. Yet they have the most daunting labor absorption challenge of any nation I've ever seen.
Right.
They still have 740 million plus workers living in the rural countryside that they're trying to absorb into their cities.
And per capita is 1/10 of ours, essentially.
Right, but they need to generate a lot of GDP growth because they create too few jobs per unit of GDP.
Yeah.
If they had more of a services-based, labor-intensive growth model, which is actually one of the premises of this consumption plan, then they can grow more slowly.
We're Roach, The Next Asia. You can see it there. It's a great book. It's his essays, but updated. If you were to write a new essay, Steve Roach, for The Next Asia, right now, the new paper back out, what would you be writing this week about China?
I'd be writing about the tensions in the U.S.-China relationship.
You could see it in the body language of the senators.
Yeah.
Peter Cook had that. John Kerry was like, I really don't want to be here. But
yeah, I mean, this meeting with the two presidents, Hu and Obama, was very important. My hope is that they would move the debate beyond the currency, beyond the renminbi, and it doesn't look like they did. I mean, it's renminbi, renminbi, renminbi. The U.S. view is China will get nowhere with us until we push them to engineer a radical revaluation of their currency, and they're not going to do it.
I want to come back and talk about renminbi here in a minute, but I think this is important. Early this morning on Bloomberg Surveillance, I spoke with Elizabeth Economy, the Council on Foreign Relations. I asked her about President Hu's stance on human rights.
Well, I think President Hu Jintao has shown virtually no interest in expanding human rights in China over the past 8 years that he's been president. And he made a small statement about the need for further progress, which he then, in that press conference, and then he followed that up by saying, of course, there's non-interference in domestic affairs, blah, blah, blah. I mean, this is very typical Chinese rhetoric. So I don't expect to see Nobel Peace Prize winner Liu Xiaobo released from prison as a result of some kind of new awakening on the part of President Hu Jintao on human rights.
Elizabeth Economy, the Council on Foreign Relations. I can't say enough about her article in Foreign Policy magazine. Steve Roach, you hear Dr. Economy, they're talking about human rights. I got a wonderful email from David in Brooklyn, one of our viewers, and he just said, would you please ask Stephen Roach about human rights? There's all these CEOs and there's guys, and you go into Hong Kong and there's big Morgan Stanley billboards. Great. How do you buttress that with your years of experience with the realities of human rights in China?
Well, Tom, with all due respect to my good friend Liz, who I have worked with over the years, I think you have to be careful in generalizing a nation's overall stance on such a broad issue as human rights by looking at a situation like Liu Xiaobo or personality-specific incidents. The average Chinese family has seen a tenfold increase in his or her per capita income since 1990. It's a spectacular increase. The boundaries of individual expression, freedom of communication, upward mobility in the society have increased a lot. There are still boundaries, though.
Right.
And there are boundaries of civil behavior in any society that I know of, including the United States.
You look at the span of the Chinese modern experience, and I think of a Bloomberg Link event we're having in February, Orville Schell and Jonathan Spence on the same stage on China, which I think is fabulous. We have come so far since the famines. In the disaster, I go back again to the theme of this show today. Where are we going to be in 5 years? Is it just continued prosperity within an incredibly limited regime? Or do you get any sense of, forget about democracy, any sense of a new calculus of their politics 5 years out?
It's got to change, Tom.
It's got to change.
But here's why it has to change. If you were just extrapolating the old model, again, a production manufacturing model focused on investments and exports, you don't need to change it. But you're going from a production model to a consumption model. And with a consumption model comes the aspirational values of a consumer society that will really challenge the existing political arrangement as it exists today. And the Chinese know this. Premier Wen Jiabao has been talking about political reform throughout 2010.
I want to come back to dollar renminbi here. If you can show me, Rex, there it is, dollar renminbi. Here's the touch point, if you will, for the politicians in Washington. This is the backstory. I'm sorry, Steve Roach, a 20% appreciation of the renminbi since that historic day in the summer of 2005. What more do we need to do? Do we need to go another 20%? in renminbi strength?
Look, I don't think there's a precise target, Tom, but I think you're correct to point out that the dollar renminbi has been on the move, and actually it's up more than 20, it's maybe up about 25% now against the U.S. dollar, and in inflation-adjusted terms, it's up more than that, given the acceleration of Chinese inflation. The politicians, of course, want more because America has, a horrific unemployment and labor market stress problem, and they've been led to believe by a lot of experts, I won't name any, but a few Nobel Prize winners with beards, that this is...
Well, that narrows it down. That's a break exclusive. I'm sorry. Steve Roach identifying beards with Nobel academics. That's good.
And I didn't mean Joe Stiglitz. That the renminbi is the problem for the American worker. I think, unfortunately, with all due respect, that really oversimplifies and distorts the problem.
But come on, I can't remember if Avinash Dixit at Princeton has a beard or not. But anyways, the great professor at Princeton on game theory, China, U.S., China, U.S. Peter Cook would say China, China, China. Come on, there's a lot of other countries out there where you could have leakages to other nations of labor.
That's the point. You look at the United States. We had trade deficits last year with 90 countries, 9-0. China was the biggest, but there were 89 others. We have a multilateral problem. You can't fix that by putting pressure on a bilateral exchange rate. This is not sophisticated math.
Do you look at China as homogenous, or is there the Pacific Rim and there's a whole nother China in your classic Roach labor arbitrage in central or western China as well?
Look, I don't want to generalize the United States based on New York City. I don't want to generalize China on the basis of coastal China. It's a heterogeneous nation with lots of disparities in terms of living standards, the pace, the depth, the breadth of economic development, the product mix, and the broad talent pool.
I want to squeeze this in. This is a terrific chart. This is the chart Roach was touching on. It's an elegant chart and it's complex. Normaled exports from the U.S. to China, that's the white line, and the yellow line is imports to the U.S. from China. This is not the series. This is their growth rates, normaled back to 2005. And the president was touching on this, Steve Roach. Exports from the U.S. to China are growing. And I don't think most Americans know that, do they?
Tom, it's not that they're just growing.
They're booming.
It's our third largest export market behind Canada and Mexico.
Sarah, be sure you banner that. That's critical what Dr. Roach just
Third largest. And the growth rate over the last 5 years, the last 10 years, has been well in excess of exports to any of our major trading partners. So the Obama administration recognizes that the domestic drivers of U.S. economic growth are going to be weak for a lot of reasons over the next several years. So we need external drivers and to fill the void, and they have identified a target of doubling our exports over the next 5 years. We can't do that without China.
We can't do it without China. Do we need currency to assist, or is that second?
No, currency, as long as China remains on a path for gradual currency appreciation, and you just pointed out that they are, we'll be fine. We compete not just on the basis of currency, but on the basis of our technology, our product quality, our innovation, and the skill set of our knowledge workers.
Steve mentioned a dangerous cocktail in one of your notes. What's the dangerous cocktail for the United States here?
Well, I think China bashing, Tom, is particularly dangerous because we have serious problems in consumer demand over the next few years, post-property bubble, post-credit bubble, with 9% plus unemployment and a lot more than that with underemployment added in. So the internal demand is not going to be there. So we need external demand. And if we go out and put trade sanctions, as the House of Representatives voted to do last September, on our third largest export market, we get caught with a lack of internal demand and a real risk of external demand, and the recovery stalls out.
Let's do another Liz economy quote. I want to bring this up, Steve, and this has to do with the not hysteria, but just the breathless tone. For all the breathless headlines, there's no real clarity as to what kind of global power China will become over the next critical decade. The breathless headlines, the media response here, both by the Chinese and the United States, there is at least a dialogue going on. It's a substantial dialogue, isn't it?
Look, we have this strategic and economic dialogue that now takes place once a year. Under the prior administration, it took place twice a year. It's very extensive. There's a lot of discussions going on. The Treasury Department in the United States has now installed a full-time attaché living in Beijing, and that's been David Levenger was the first one, and a guy by the name of David Dollar is now taking his place. And they're engaged day to day in ongoing discussions with their counterparts in China. So there's an awful lot of discussion. The working relationship between these two nations, and I've seen it up close firsthand, is very impressive now.
When you look at, just one final quick question, if we could, which city should we focus on in the next 5 years? Which is the city you're most focused on in China?
I don't think there's any one city. I spend a lot of my time all over the nation. I think Americans spend too much time in Beijing, Shanghai. Right. They need to go inland, whether it's Nanjing or up the coast, Dalian, Chongqing. You got to see the nation. It is not just one or two cities.
It's not just Hong Kong. Stephen Roach, thank you so much. A generous half hour with Dr. Roach of Yale University.